How do you deal with a low appraisal as a buyer? Appraisals can be a make or break part of the lending process for both a buyer and a seller. Today, we will be focusing on the buyer's side of a low appraisal. If you are working with a realtor, they may have their own experience and strategies for this scenario, so these suggestions are meant to be a starting point and educational. If you are not working with a realtor, you may wear many hats, so to speak, through the purchase or sale of your home, including dealing with a low appraisal. The inspiration for this video comes from an article posted on Realtor.com about a month ago about 4 ways to deal with a low appraisal. We've also added some of our own thoughts and experiences to their suggestions. We will assume that the appraisal is required, that the buyer needs the financing and is not prepared to pay cash for the whole deal. We will also assume there was a mortgage contingency outlined in the purchase contract and an appraisal contingency so that the seller knew in advance that an appraisal would be a key part of the process. Lenders will only underwrite loans for the purchase price or appraised value, whichever is lower. The appraised value can change the original expected loan to value ratio, which can impact a borrower's qualifying and total funds needed to close. Low appraisals can be common in uptrending housing markets because appraisal valuations use recently completed nearby sales as comparable values. It is not the listing price that matters, but the sold and closed price. In an uptrending market, the sales from a few months ago may be lower than the current market value, and therefore recent sales are a lagging indicator of price. 1% or 2% low does not sound like much on the surface, but on a $4,000 house, 1% is $4,000. And if the appraisal comes in a few percent lower than expected, it could change your entire financing plan. We find on average that for purchases, appraisals tend to be higher than for refinances. On purchases, the appraiser receives the purchase contract as well as any escalation addendums, so they can see the contract price that the buyer and seller want the deal to go through in advance. The story is a little different when there is no purchase contract present, as is the case for a refinance. Appraisals do tend to come in lower. That is because on a refinance, the appraisal is only to protect the lender. On a purchase, the appraisal is mostly to protect the lender, but it could also protect the buyer if the home sale price is truly overinflated compared to the comparable properties. Comparables is shortened to the word comps in the real estate industry, in case you hear that term. So if you are purchasing a new home or refinancing a current home and receive a low appraisal, what are your options? Well, the first is to look for errors. The best place to start is thoroughly checking the appraisal report. If you have an agent, they will be helping you with this or doing it on your behalf. If you are buying the home on your own, then that task falls to you. Appraisals can be 40 pages or more, including pictures and comps, so this is no small undertaking for someone that has never read an appraisal before. Make sure to approach it when you are fresh and take your time going through the report. Make sure the gross living area and below grade living areas are accurate. The report will also list the comps by address and any adjustments given for things the subject property of the report did or did not have compared to those comps. Second, you can negotiate with the seller. After looking for errors, we think the next best option may be negotiating with the seller. We have seen instances where a seller will come down a substantial amount in price based on the low appraisal. In this case, there will be a signed addendum reducing the sales price. We have also seen instances where a seller will not budge. In this case, the next step might be to request a reconsideration of value with different comps. The appraisal will list the comps used. If you are going to request a reconsideration of value, you will need to find other recently sold homes. It's important they are not listings. Recently sold in the case of reconsiderations of value means about 3 months usually. They also need to be near the current sale. The best bet is to find that lender's reconsideration of value process or form and look at the guidelines to make sure the comps you find meet the criteria. We often receive comps from buyers and listing agents that don't fit the guidelines and they can't be used for the reconsideration request, meaning those people did a lot of work that will not change the outcome. The fourth suggestion is to pay the difference out of pocket. If you have the money to cover the difference or can get a gift from a relative, that is a simple way to solve this problem, depending on how low the appraised value is compared to the sales price. Lenders will typically want you to sign a letter of explanation stating that you understand the appraisal came in lower than the purchase price and that you are comfortable paying the difference. We have seen people sell vehicles or other personal property and/or take retirement plan loans in a pinch when they really wanted the home. Fifth, you can consider reducing your down payment percentage if possible. If you were planning to put down 20% or more, you might be able to reduce the amount you are putting down to maybe 15%, for example. This will give you cash to reallocate to paying the difference. This may result in higher loan-to-value ratio where you are required to pay mortgage insurance. Mortgage insurance is typically pretty inexpensive for borrowers with good credit and low debt-to-income ratios. So if this is the difference between getting the property you want or not, it might be worth considering. Sixth, you might want to start over with another lender and get another appraisal. As mortgage brokers, we have access to many lenders. If you are using a mortgage broker, they may be able to just start you over with another lender of theirs. If you are using a specific bank, you may need to be the one to start over with a different lender. There is little doubt that an appraisal is subjective. If you obtain 5 different appraisals, you could have 5 different values. We have seen people switch lenders and start over with a new appraisal, and the value comes in much different. The risk of doing this is 1, the time to get it done, and 2, the cost. If your closing is happening soon, then there might not be enough time for another appraisal. Also, the listing agent and seller would know this is happening because another appraiser would need access to the property. You could pay for a second appraisal and receive the same result. That's definitely the risk. And lastly, you can walk away. If you've exhausted all of your other options, assuming your contract had an appraisal contingency, it is a reason for you to be able to walk away with the only cost being paid for the credit report and appraisal. An appraisal's purpose is to make sure the lender does not lend more than the market value of the property and the buyer does not pay an exorbitant price compared to the comps. Can you think of any other strategies we missed? Our next video will be looking at proactive things that you can do as a seller to help avoid a low appraisal and reduce the chances you find yourself in this low appraisal situation.